let's go to the daily chart of Nifty and understand why Nifty is falling today. The Nifty has been bullish since, I would say, 16,910 or 15 ish, and it continuously kept on going up, and it opened today somewhere around 17,860. So this right from here till here, there is a huge continuous run. So this cannot keep on going. It has to retrace. The reason the market continuously kept on going up for the past 2 weeks is probably, the bigger fishes of the market already knew that Bloomberg report is going to come out, and that it's going to publish that there's a 0% chance of recession in India. And probably that's why the market factored that in, and it continuously was bullish. But now, since the news is already out, there are going to be retail traders who are going to get in, and that is where they are booking some of the profits. So if I just project the Fibonacci tool, we can see that around 23.6% is the first area, which is 17,630 zone, and the second would be your 38.2% retracement, which is the 17,496 or 90 zone. Next would be the 50% retracement, which is the best zone for a buying entry here in this particular scenario. That would be 17,380 zone. If it continues to come down, then probably we'll just have to wait for price action. Now, what we need to see is we cannot just go ahead and jump into it. We'll have to break it down to the lower time frame and see if the selling is stopping. If the selling doesn't stop, we cannot go ahead and start entering a buying position. Otherwise, we'll be trapped on the wrong side of the trend. Now, the problem here is at every level there is support. At every level there is support. So we never know from where the market can make a U-turn. And we have seen in the past that there are V-shaped recoveries that happen in Nifty, and that takes away your stop loss in a really bad way. So it's better to wait for this selling to kind of halt, show some sign of reversal, and then plan an entry. So on the 15 minutes chart, we don't see any sort of sign of reversal here. If we go to the 5 minutes chart, of course, the lower you go in time frame, the higher setups you will see, the more number of setups you will see. But we'll have to be very careful before entering. So even now we don't see a setup where we can enter. So what do we do? So the levels that we discussed right now, the 23%, 38.2%, these are the levels. It's 17,500 and then 17,600 areas. Now, if the market continues to come down, let's say if it forms this kind of price action, let's say it's kind of falling right now. It has fallen from this zone and then it has retraced still here. It's right now falling. Let's say if it tries to halt here, keeps on falling, halt, and then keeps on falling, and then some sort of sideways momentum if we see, and then if we see that some sort of trend line gets broken, and then again there is a mini retracement, and then again this breaks out. So bottom line is, if we see a higher high formation, that is where we can enter a buy position. So whichever strike price or whatever the Nifty position is on the spot, we'll take at the money options and we'll enter there. Now remember, we cannot have a very huge targets in mind. We can target at least the previous highs. The previous highs will be our targets. We cannot have a huge target because the market is falling. So every rise is going to be a sell. So we'll have to make sure that we enter at a precisely and then we exit very precisely. So that's going to be the plan in this falling market.